Hey everybody, Joshua Phillips here with Churchill Mortgage. It is Friday, June the 27th. Gosh, we are just right at halfway through the year and hope you're having a great summer. We are melting here in Middle Tennessee, but hopefully some cooler weather on the way. Well, listen, you're not here for a weather report, so let's start talking about mortgages and specifically mortgage rates and what's going on. But before we do, as you see here on the screen, I wanted to point out our YouTube channel. This is where we house our market update videos. Amy and I, as we go by professionally, Mortgage Magic with Josh and Ames. We're always putting out content. I think a lot of it's really helpful. Recently, a video about Fannie Mae increasing the income limits for the 97% program. Appraisal waivers just got easier. We talked about that recently. So there's always good content on our YouTube channel if you want to check that out. Well, now let's move on to the market. So let's start here with the 10-year Treasury yields. We often talk about that if you want to look at what mortgage rates are doing, you really want to look to the 10-year Treasury yields as the best way to, as somebody in the public can see what's going on. And the good news is 10-year Treasury yields have been improving. We got under 4.3 for the first time in a while. And spoiler alert, as we're going to talk about as we proceed, we're seeing the best rates we've seen in the last 2 months. So I'm pretty excited about that. We'll look more at the mortgage-backed security charge. But overall, really good news as we've seen the 10-year Treasury yield. I mean, just a few weeks ago, we were up at almost 4.6%. Now we're under 4.3%. That is good. Mortgage rates sit on top of that with about a 2.5% increase above that typically. So anytime we see the 10-year Treasury yield go down, that's good for mortgage rates. Now let's move over to the headline here. Now, this kind of goes against what I was saying, which is, we saw core inflation today come out and it rose a little bit. We never want to see the word rose. We want to see that the inflation went down. 2.7 is not bad though. We're trying to get to that 2%. And of course, as you've probably been seeing, the Fed's been holding off on cutting the Fed fund rate for a substantial period of time here. Trump keeps saying, berating Chairman Powell to lower the Fed fund rate. He's continued to refuse, although I think it's getting to the point where it's pretty clear the Fed should start lowering the Fed fund rate soon. A little note on that is not mortgage rates. So, the Fed did cut the Fed fund rate of 1% late last year and mortgage rates went up. So let's not get, too caught up in what the Fed's doing. But I think overall we'd like to see the Fed cut the Fed fund rate. But this again gives a little bit of pause, and we'll probably point out what you're going to see on that screen, why we're seeing what we're seeing today. Now, the last screen we're going to look at here, this is mortgage-backed securities. As I say every time I show this chart, that every professional loan officer in America uses this chart, has this information up on their screen. It is mortgage-backed securities, where mortgage rates most directly derive their values. And this tells us a lot as professional loan officers in terms of what's happening. All you need to know to read this chart is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. Now, well, what you're seeing here, this is a 90-day look, is you're seeing that green. Man, we've been on a green, June has been a good month for mortgage rates as we've seen mortgage rates improve probably about 0.25%, which I know that's not huge, but hey, with where we've been the last couple years, we will absolutely take 0.25% improvement in rates. Now let's go back here and let's look at 6 months, where we've been. So, if we go back to April, we were a little higher. So we are actually fairly near the best mortgage rates of the year and the best security price rates of the year as we've been climbing. If you go back here to January, we were way down, and we've been down in April, and now we're on pretty good trajectory as we've come up over all the moving averages. You'll see those different moving averages: 25-day, 50-day, 100-day, 200-day. We are above all of those. That is a positive. So now, if we do look at today, though, today's a red candle. That goes back to the article I showed you about inflation. The market got a little slightly spooked from that, as we don't want to see rising inflation. We want to see falling inflation, which should hopefully lead to better mortgage rates. But, we could also consider just a breather after we've been on a tear the last couple weeks. Again, seeing the best rates we've seen in about 2 months, and about 0.25% better than we were when we started the month. So, I mean, that is a very good month. I also will just point out briefly, if you look, let's see, we're on a 6-month chart here. I mean, rates this year have not moved up or down more than about 0.5%. It's been a roller coaster, up and down. We are on the up right now. Mortgage rates improving. That's great. And hopefully, fingers crossed, we'll see rates continue to improve slowly. And it's not going to be just like every day is better, but we will see some down days like today. But overall, I'm optimistic about it. I think this is great. And, let's just continue to ride it. And if you're looking to purchase a home, you're going to get a little better interest rate right now. If you need to refinance, I would still hold off a little longer. I personally would love to see, if we look at a 1-year chart, I'd love to see us getting back to this level where we were last September. That's the best mortgage rates we've seen in the last year, when we started to see things in the low 6s on a 30-year fixed. Right now, we're in more of the mid to upper 6s. So, on a 30-year fixed, we are dipping our toe into the 5s on a 15-year fixed. So, anyway, we're happy to talk with you. Amy Phillips, Jesse Phillips, and myself, we're part of the Phillips team. We are happy to talk you through your specific rates, pre-approval, however we can help you. We are here to help. Have a great weekend. Take care. Bye-bye.